a lot of people were anticipating a recession in the first quarter that clearly hasn't happened yet, right? The Fed, which I find comical at this point, is floating the idea of like, no, it's going to be a soft landing. So where is this recession? Is it going to happen in 2023? What's going on there?
Did you see his answer during the last press conference when somebody asked him about the soft landing? He just fumbled around, and he was like, I don't think so.
James, it's totally changed, and I bring this up in a different way. Do you notice that he doesn't talk about inflation? He in fact mentioned credit risk or credit, the word credit, over 10 times as often as he mentioned the word inflation.
That's right.
It'll just show you how the focus of the Fed has shifted
That's
to
why
a credit crisis.
Yeah, that's
a
why
credit crisis which will lead, right, James? A credit crisis which will lead to a recession, because when credit gets choked off, Nico, like we're right within a rounding error, not even a rounding error, with a statistical error of being in a recession right now, and all of a sudden you get hit with a credit crisis. Well, look, I don't even care, because all paths lead to Bitcoin. I just don't care. Like, just stop trying to fine tune this idiot needle. It is indifferent as to whether there's a true recession as defined by the Bureau of Labor Statistics versus everyone knows it's a recession, but we're going to redefine what a recession is. And by the way, a recession is going to be good for us as soon as it hits. They're going to make some reason that it's good for us. Guys, it doesn't matter. All of this means that the debt burden explodes even faster because there's no tax revenue to pay the existing debt burden, which means they got to print more money, which means Bitcoin goes up in value relative to a debasing US dollar. Hey, you want to start measuring Bitcoin in something that can at least keep pace with Bitcoin? Oil and Bitcoin. That is going to be a much better pair to look at than oil versus US dollar, or or Bitcoin versus the US dollar.
Yeah, agreed. Totally. Looking at something that's an actual commodity, And it's right. I mean, that it's a great simplification. It's so important, is that there is no path that does not lead to debasement. Every single path leads to debasement. It's just a question of, I saw somebody ask, like, look, I usually feel things are longer. Mel was saying this, and than I expect. But right now I feel nervous. Well, I'll tell you a few things. Part of me, I feel more nervous about this environment than I ever have, like more anxious about it. And part of me feels so at peace and calm because I own Bitcoin. So it's like, I've got this thing going on where I'm maybe shell shocked from my old days on Wall Street, and 1998 long-term capital management, and then 2001, and then 2008, and now it's like, maybe that's part of it, but there's just no way around it. It's pure math. And it is all going towards printing more money and debasing the dollar. It has to happen. And the question is, how rapidly, and does de Bellagio win his bet or not? Because
indifferent
it doesn't
because
matter.
You know what?
It's going to happen either way. It's just a question of whether it happens in 90 days.
Either way we win. Okay, guys. Yeah. So just keep the path. Larry Lepard was on a great Spaces group. James was part of it today. And I'll just say, just take it as if this is a marathon, not a sprint. Okay. Keep focused on the finish line, which is 26 miles in the difference. In the distance, 42 kilometers. We don't care what happens over the next kilometer or two or, mile and a half. We're in this for the next 20 years because of the kids. This is the life raft. And if you have people who are not in Bitcoin yet, you're sort of happy that the price is staying at a reasonable purchase price that doesn't appear excessive for the people who still haven't done their homework, Nico. Not everybody understands. Hey, I noticed, by the way, Big Sean Harris is in the house. Thanks for joining, Sean. Guys, look.
What's up, Sean?
Yeah, all we can say is this. All we can say is we're trying to educate people to do the simple mathematics, and we're not trying to slow the FOMO. Look, it's not FOMO. This is fucking education. Okay. If I'm freaking you out because you don't own it, then I'm doing the right stuff. If you don't own it and you're too stupid to own it, get someone else to manage your money. Okay. Because this is truth we're talking, not FOMO. It's based on mathematics. It's not based on anything else. It's 100% certain the US dollar will debase. 100% certain. You very rarely get 100% certainty in your life. Well, it's 100% certain the US dollar is going to debase. Plan accordingly.
Yeah.
So what indicators are you guys looking at, right? So, the house is on fire, clearly, right? We're getting the rumblings of a potential disaster, right? What indicators do you guys have your eyes on? Is there anything specifically that you guys are looking at that puts the hairs in the back of your neck up?
Well, I mean, like you're watching CDS, and Greg has traded so many CDSs. I traded a lot of them, but with different purpose than Greg did. You're watching these things, and you're watching for the rate of change of them. Not just where the actual price is, but how quickly, how rapidly they're changing. How quickly that move index is changing. That's the volatility of bonds index. You're watching that. You're watching the treasuries and the volatility of the interest rates and whether something happens there in the auctions or the repo market. But I got news for you, Nico. The problem is that I feel that when we get an event, you're not going to be able to react. It's going to hit you like you're the bug on the windshield. Like you're not going to be able to react. You better be, positioned accordingly now. Don't wait to position, and I'm not talking about position yourself to go make, $100 million and just put all in, one spot. No, that's not what I'm saying. I'm saying position yourself by owning some Bitcoin, making sure that you don't own a whole lot of long-term treasuries that you can't get out of, making sure that you do have some cash for when the bottom drops out, you can react like that. You're not having to reposition your portfolio. I'm not talking about holding cash for 10 years. That's idiotic. I'm talking about just like right now being focused on there's going to be some huge opportunities, because when something hits, man, it's going to be painful. And then it's a gut check. And God, I've lived through these. It is not easy to live through that gut check where you're like, if you don't feel a little bit sick as you press that buy button, then it's not time yet,
So, and let me ask you something. I'm going to pass this to Greg, right? So far, Bitcoin, I mean, not really anymore, but it was behaving like a risk on asset for a long time. If this, and by the way, James, I completely agree with you, but just for the sake of this conversation, if and when this gut check happens, do you think Bitcoin is going to perform poorly? Is it going to be pulled down with the rest, with with the rest of the?
Is it going to get? Yeah, I mean, is it going to get hit with everything else? Look, when you have a market event, a credit event, and you have like a dramatic sell-off, and there's a crash, there's a saying we have that everything goes correlation 1. Everything gets correlated to 1. It means that they just sell everything. Why does that happen? Well, because managers need to raise money everywhere. They just can't discern. Like they just sell 20% of everything I own, 30% of everything I own. I need cash, and that's just what happens. And so everything gets correlated to 1. But I do believe that assets like Bitcoin, that is not going to be, I don't believe that that's going to be like something that we trade sideways again for another 3, 6, 9 months. That is going to be a V recovery type of situation like we saw back in March of 2020. That's my guess, and that's my probability analysis. What do you think, Greg?
I'm more optimistic that people will understand that Bitcoin's insurance, and they will be selling other stuff to buy the insurance, because that's the only lifeboat there is that works. I will note.
Yeah, but I think that absolutely does happen. But I think that there's this reaction.
No, it's fair. Market, like I'm not going to argue over it, because again, I'm talking about 20 years here. But look, you asked me what my my dashboard looks like. Okay, so I'm so proud that everybody actually understands what a credit default swap is now. 3 years ago, I came on the scene talking about credit default swaps on sovereigns and using credit default swaps to value Bitcoin. And, you know, I got a little bit of Marty Bent was amazing. I got a little bit of positive feedback, but it's taken me 3 years to preach the gospel of credit running the world. So yes, always look at credit default swaps. Understand that we're going to move from financial focus on CDS on financials and kick that up a level to focus on CDS on sovereign debt, because ultimately it's only the sovereigns that are going to guarantee the financials. Okay. I found it interesting today, whether it's true or not, that CNBC feed has stopped providing credit default swap prices, if you will, or spreads on banks. Have you seen that? That's
Really?
not on their CNBC because they felt perhaps that too many people had started to watch credit default swaps on Bank of America and the big banks. So I'll just say, luckily, you can still get that info on Bloomberg, but CNBC has taken it upon themselves to remove that from the
Yeah,
common.
but you can only get on Bloomberg Pro, right? It's not.
Well, anyway, it doesn't matter.
There, but
well,
you can see sovereigns on the sovereign,
which is cool. But listen. Here's another one on my dashboard. Commercial mortgage-backed securities, and watch CMBS index, okay, and the value of CMBS. I think real estate and commercial real estate is the next shoe to fall. And when that falls, we have another banking crisis 2.0. So 2023.2 instead of 2023.1, which was an interest rate event. Then it's going to be a credit event. So watch CMBS. Don't own bank stocks. That's probably my best advice possible. Do not own bank stocks. Now, particularly in Canada, everybody owns bank stocks because they pay a healthy dividend. You guys haven't done the math. You are not making a proper return on the risk you are taking owning bank stocks. Banks can get bailed out, but it doesn't mean that their stocks maintain value. Look at what happened to Credit Suisse, which James and I were calling for 3 years, that they were in trouble. Okay, the bank went from being worth $14 billion to getting restructured at $3 billion, which meant you lost 70% of your bank equity investment. And to accomplish that, guys, they had to write off bonds worth $17 billion down to zero. Now, notwithstanding the fact that I believe that was an illegal move, because bonds should always at least rank pari passu with the equity, which means equal rank. They normally rank superior to the equity. Anyway, the Swiss authorities decided to write that down. Who's the biggest issuer of these so-called COCO bonds now? Oh, it happens to be Deutsche Bank. Isn't that interesting? Because everybody's worried about Deutsche Bank right now, as they should be. So the contagion risk exists. Anything that monitors a contagion, whether it's volatility index, whether it's move, whether it's a rush to the US dollar, strengthening of the DXY, even though the DXY is still the best looking horse at the glue factory, it is a flight to safety that makes no sense. In all of these cases, I don't mind what Bitcoin is doing in fiat fucking dollars. 1 Bitcoin equals 1 Bitcoin, and that is your lifeboat, okay? So I don't want the global financial system to collapse. I need to be very clear about that. But they're doing a hell of a job at making it do so, okay? They're undercapitalized. They're mismanaging their risk. You got a clown called Yellen, supported by a clown called Powell, and they can't even get on the same page. Oh, we're gonna insure all unsecured deposits. Oh, well, we've decided we're not going to secure all unsecured deposits, when Powell is on the podium at the very same time at the press release saying he's going to do it. This is a circus act of monumental proportions, and Yellen should be out watering her petunias. Get that stupid fool off of fucking television. I love grandmas, but I don't love grandmas who manage the U.S. Treasury, okay? Go water your flower, Grandma. You are an embarrassment to financial risk management.